trucking, got my chips cashed in. Keep trucking like a doodah man together, more or less in line. Just keep trucking on.
Arrows of neon and flashing marquees out on Main Street. Chicago, New York, Detroit, and it's all on the same street. A typical city involved in a typical daydream. Hang it up and see what tomorrow brings.
Dallas got a soft machine. Houston, too close to New Orleans. New York got the ways and means and just won't let you be.
Woo! We are back. Episode 30, True North, the investment grade Bitcoin podcast. We are cooking here. And without further ado, we're going to start with a quick intro of True North World. Let's hit it. It became very apparent that my time and energy was much better spent in this arena.
We're talking about people that are making a lot of money and they want to focus on Bitcoin.
Sellers always talking about Bitcoin is fire in cyberspace. I like to say I majored in Bitcoin, minored in MicroStrategy.
A concentrated position in one stock.
Strategy without a Bitcoiner hat on.
It's all powered by this capital markets arbitrage. Setting sail with Satoshi and Sailor.
If I could make a contribution that was going to be fully aligned with Bitcoin.
So pretty much went all in. Been no looking back at this point.
A Bitcoin only feed, just Bitcoin and strategy.
I titled this one Conviction as a Service for that exact point.
Really needed some hope for my future and found Bitcoin.
All right, welcome back. Episode 30, True North, the investment grade Bitcoin podcast. I've got sun shining through. Tim is in Prague. It's 4:00 in the morning there. We've got Solei and Adrian on the call tonight, and I think it'll be a good one. Might be a little quick because not much has changed since last week, except some drama in the market sentiment department. And hope you like the quick intro video there. We are going to be releasing the content that we created from the True North World event that we had in Orlando on the back of Strategy World. So we are drumming up some interest there, and each one of the pieces will be released over the next, I think, 2 weeks. So hope you guys follow along and, get to see some of the content that we put together. We put a lot of time and energy into that event, and hopefully we can do another one here in the near future. So without further ado, we'll get into the agenda for tonight. So we're going to go over a quick leverage update as we do every week. Talk about market sentiment, which has been a bit poor recently, and I think rightfully so. There's been a little bit of chop and sideways and, ups and downs in both directions. We'll talk about Bitcoin use cases and collateral, because I think that's just something we need to continue to hit on, because I think a lot of people aren't really wrapping their heads around it. BTC yield as a concept. We'll do the S&P 500 tracker. We'll look at the earnings, the potential earnings update for MSTR moving forward into the future. What would that look like? And we'll get into an et cetera department. And we'll talk about fixed income. We'll talk about the Fed, maybe war nodes, some of the work that everybody else has been doing behind the scenes, and talk about some valuation things. And yeah, you're right, Chris. Nothing changed. Strategy bought 10,000 Bitcoin. I guess that counts as change. So yeah, appreciate everybody in the comments. Keep them coming, and I think we'll have some time at the end. Maybe we'll go through some questions. Cool. Well, with that, we will jump right into the leverage update, and I will share my screen here.
Jeff, you said the word leverage. We got to say this is not financial advice.
Oh yeah. Oh yep. Back to you, Tim. Hold on. Let me get you back on here. Go ahead. Over to you, Tim.
All right. Whether you're in Las Vegas, Orlando, or Prague, this may be entertaining, but it's not financial advice. Back to you, Jeff.
Boom, we're back. None of this is financial advice. Oh, a little bit of background. If this is your first time watching a True North podcast on episode 30, our goal is to be the investment grade Bitcoin podcast. We're here talking about strategy. We're talking about Bitcoin treasury companies. We're talking about any corporation that's adding Bitcoin to their balance sheet. What does that look like? How are these equities trading in the market? What are these new fixed income products that these companies are designing? What is a convertible bond? We hit on all these different instruments and kind of what's happening in the market every week. So we've been doing this since October, and our goal is to, educate the community because we all have different backgrounds and different perspectives on the market. And this is the biggest story in all of finance. So, companies adding Bitcoin to their balance sheet and the increasing financial strength that they're continuing to have in the market. So great time to be talking about Bitcoin, great time to be talking about strategy, great time to be talking about Bitcoin treasury companies. There's clearly a lot of energy in the space right now. Just looking at how much capital has been raised every week for strategy, and even some of these Bitcoin treasury companies that are moving really quickly. So without further ado, we'll jump into the leverage update. And this is important. We share this every single week because the commentary is, strategy is incredibly over levered. They're levered to the gills. They've got so much. They're taking on so much debt to buy Bitcoin. And when you actually just zoom out and you look at some of the math, it doesn't look that bad. So that's the reason we show it. As of this week, so 6/18/2025, MSTR holds 592,100 Bitcoin. That's an increase from last week of 10,100 Bitcoin. One more week without using the MSTR ATM. So we got the $1 billion buy from STRD. I think about 76-ish million from the other two instruments, the ATM on the other two instruments, STRF and STRK, which is big. That's the third week in a row there hasn't been MSTR ATM. So I think the MSTR ATM bears have been a little bit quieter. It's just shifted to, why isn't the stock performing? Which is just a funny sentiment shift. So Bitcoin held 592,100 Bitcoin held at the price when I started the episode is around $104,960. So they have $62 billion of assets, $8.2 billion of debt, $3.3 billion of preferred stock. Net capital held on balance sheet is $50.5 billion. $50.5 billion. Just to put this into perspective, it's a huge number. It's just a totally monumental number. This would represent the third largest reinsurance entity in the entire globe. So my background being in reinsurance, there are 100 plus reinsurance entities that exist in the entire global, reinsurance ecosystem. And this would be the third largest. Just the net capital held on balance sheet would be the third largest reinsurance company. So that's a very significant amount of money that they hold. It's a relatively niche market, but it would be very, very, very big. In terms of leverage ratio, so just taking the assets relative to the debt, the leverage ratio is 18.6%, debt coverage multiple of 5.4. That means over every instrument that they have 5.4 times the amount of assets than they do debt on the balance sheet. So what does that mean? That means that the Bitcoin price would need to go down below $13,890 and stay there for an extended period of time in order for the assets to be worth less than the liabilities and strategy to be in any sort of circumstance where they wouldn't be able to pay out their debt into the future, into perpetuity. So really, I mean, these figures are huge. There's a reason we start with this every single week, because this is one of the strongest financial companies on the entire planet, let alone it's definitely the strongest Bitcoin treasury company by magnitudes, right? Multiples greater than any other company out in the entire market. Yeah, there are some companies that exist that have less debt or no debt, but you can argue if you don't have any debt, you're inefficiently allocating capital on your balance sheet. So just some things to take into consideration. There's also another column here, a pro forma column, that's outlining what the leverage ratio would look like if all of the convertible debt that's currently trading in the money were to convert into equity. All the convertible debt that's currently trading in the money is hedged by short positions. So there are short positions that are matched effectively probably 1-to-1 with the equity that each one of these convertible debt holders holds. So if these convertible bonds do get converted into equity, that would likely cancel out 1-to-1 the short interest and the equity. So there likely wouldn't be much movement on the stock, and that would drop the debt on the balance sheet from 8.2 billion down to 5 billion. So again, looking at the leverage ratio, incredibly under leveraged in my opinion, under leveraged in many other people's opinion, with a 13.4% leverage ratio and a debt coverage multiple of 7.4. So incredibly well over collateralized. I have zero concern on the financial strength of this company and their ability to pay out their debt or their preferred stock into the future. Anybody else have anything to add?
Yeah, I think some of the sentiment is it just seems like bored strategy investors chasing squirrels to a certain extent, like just kind of getting distracted by the new shiny object, which I think we'll probably talk about it later, but I think there's going to be people who are executing the strategy well, like a meta planet. And then I think we're going to have to be very careful about the dozens, maybe hundreds of Bitcoin treasury companies that are going to pop up on the back of this hype.
Yeah, I mean, there's going to be a ton that are going to be popping up over time, right? I think it's tough to say, right? But we've got what, a half a dozen or a dozen now that are popping up, and they're adopting this, a beta strategy where they're all, using ATM and using operating business to generate more cash flow to bring more Bitcoin on the balance sheet. But I mean, we're still in incredibly early days, and I still think that there's a possibility that there's going to be a bear market at some point in the future when, there's just a little bit of skittishness in the market to adopt a Bitcoin treasury strategy, and that could be a really good opportunity for any company that's maybe on the sidelines to start putting in work to adopt a Bitcoin treasury standard into the future. So I really, it's going to take so long. Like, I was on a phone call earlier today, and we're just talking about timeline, right? Like, they're a private company and they're looking to go public and potentially start running the strategy. They've got a good underlying business. They're relatively small, and we're talking 12 months out, right? Like 8 to 12 months, starting from private today in order to, get public and have liquidity in the public markets. So it's not a really fast thing. Any company that's gone public or gone through this process with a pipe recently they're either already been public or they've already had full audited financials, all of these things. And they were already really close to the, being able to go through this process already. And that's how they've been able to enter the public arena. So it just takes a bit of time. And I think it's going to take a lot longer than many people think for more of these companies to come onto the scene.
I would agree. I've had conversations with previous clients. I've had conversations with individuals that I know that work for Fortune 500 companies and leadership positions and whatnot. And if a company even were to consider this, to your point, if they were to start right now, it's a year to 18 months out before they could actually go live with it. I think, in terms of one, getting buy-in, and two, actually making it work. So I do think we have a lot more time here. With regards to a bear market, I'm still, thinking through how deep that bear market can go. I do think we're going to see a retracement, obviously, but I still don't know if we're going to see that 80% drawdown like we have in the past. But yeah, I know we've said this a lot on the show. We are still early, and I do think that, to Soleil's point with the sentiment, it is people chasing squirrels, but it's also a lot of cost basis bias. So someone that's newer in the trade, they're far more impatient than someone's been in it for like 2 years, right? Like I'm fine with the price activity the way I see it right now, and a lot of us are. But a lot of individuals that I've seen their posts, I've seen that they got in right around the top at 543 or just after. They are some of the loudest ones that are the most frustrated, and they're the ones that are talking about, I sold all my MSTR to rotate into X, Y, or Z.
Yeah.
And it's kind of weird. We went from people saying, I sold all my MSTR to roll into Misty, and now a lot of people are saying they sold all their MSTR to roll into another play. And I'm seeing people that sold MSTR for Misty going from MSTR to Misty to one of these other plays. And it's like, you're burning your cash every single time you do that. Like, have you sat down with like at least a spreadsheet to plan this thing out? The answer is no. But that's one of the questions that I ask. And I just think that people need to really have a long time horizon, or if they're going to rotate, is it really worth it to burn your whole position to do so?
Hopefully be in a non-taxable account, right?
There's that as well. So it's like you're getting eaten with taxes, and you're rotating your position into a new play that's potentially more volatile. Yeah, I just think there's a lot of impatience. There's a lot of gambling going on, and that's going to rectify itself like it always does.
One Solei, to your point, right? People like if you zoom out, and Adrian, to your point as well. I haven't updated any of this data, and it could actually be helpful if somebody in the stream wants to help me update this. But for a while, how I do the daily updates of like where these companies rank, like how strategy ranks to other companies. So I stopped tracking in October, October 4th. I was tracking this every day. I was like doing it manually in Excel. But on October 4th, strategy was ranked 267th largest company by market cap on October 4th. So what is that? 8 months ago?
8 months.
8 months ago. And the market cap was $35 billion. And what is this? And the price is $176. Fast forward, right? Like anybody that was buying the stock here, or even in September, right? Anybody that was buying the stock in September, you were able to buy the stock in September for $114. Sentiment was horrible. In September, right? Completely horrible. And it was very similar to where we are right now, where anybody looking back, if they bought in September, like they were taking on a tremendous risk, right? Like they were taking on significantly more risk because the company was in September was a $22 billion market cap company. There's significantly more risk with a smaller company than a larger company. And I mean, how much Bitcoin did they have in their balance sheet at that point too? That was 9/30/24. They had 252,000 Bitcoin on the balance sheet. So now the Bitcoin is more than doubled. More than doubled
their holdings.
Yeah, it's more than doubled. And let's see, the stock has quadrupled. Nearly quadrupled. Right. And that's kind of where we're at today. Like you look back to where things were previously, like strategy's not slowing down, right? They are picking up steam. They're incredibly strong right now. Right. They're delevered. They're now able to capitalize on an ATM on any of these new instruments that they've got in the market and bring this capital in the door without tapping the ATM on MSTR. So there's no like instant dilution. So they're able to add the Bitcoin to the balance sheet without having this kind of instant dilution impact, which is incredibly powerful, right? Like they didn't have that back in September. But you knew that they would, right? You knew that there was things on the horizon. You're like, they're going to be able to monetize this Bitcoin stack greater than what they're doing right now. And like, now we have the products. Like strategy has the products, and they can tap a $600 trillion pool of capital for these products over the next 20 years. And people are getting bored because, the IBIT to MSTR is down 25 bips on the day, right? Like, are you kidding me? It's such a weird thing, and the sentiment is just so strange how it kind of follows it. It's like infectious. It's kind of a wildfire.
Yeah,
and we also do have people that are pushing a narrative as well, right? That are screaming into the ether of the online world as loud as they possibly can, and doing their best to create noise that people just kind of latch onto and they run with it. Kind of like Soleil's squirrel point. The noise is a squirrel, and they keep chasing the noise, right? So you have a lot of situations now where, and we sound so corny saying it, where people really need to zoom out. Like September was bad. I'm sure you remember. Like, was it after March or was it April when we ticked up over, like we hit 1999? And then the price dropped.
March.
Down.
Yeah, it was like March 15th. Yeah, we hit 19.99 and 99 cents.
Yeah,
and then slammed down to like 101.
Yeah, and people were all over us at that point too. And then they got over us again. So it's just a cycle that we're going to see. And I think that what's funny is that I distinctly remember people that were crying the loudest and were some of the meanest comments back in March. They're now the ones saying relax to everyone. Yeah. So we're going to see that trend continue when we roll into this next uptrend here, and we're probably going to be having the same conversation, unfortunately, in 2026 and 2027 and 2028 until the next halving. So
I think people are going to look back on episode 30 and be like, that was the equivalent of 1999.
Yeah.
The
Right?
price lag, yeah.
Like, and you, like, to your point, Adrian, then you have people like Colleen, right, in the comments. Fidelity asked me in September, what are you thinking? And she just said, you'll see. Right? That's called conviction. Like,
Mhm.
there's plenty of people out there that know how to buy Bitcoin. We all know how to buy Bitcoin, but like, do you have the courage and conviction? And I'm, I guess while we're in the notes, shout out to Adam Livingston, right? Someone made a comment about he's the where is it? Where is it?
Well, his pre-workout, I saw that one.
Yeah, yeah. Your videos are wild. No, I love Adam. I think I can say we love Adam. So no,
Yeah, he's
great job.
making great content. I mean, anybody that's interested in talking about this stuff, just get on, like, go buy a microphone, a Yeti Blue microphone. It costs $80. Get a Logitech camera that I'm using right now. It costs $65, and just start talking. Like, it goes a really long way.
I mean, to that point, it's like you look at the price action, and I know we were saying this a few months ago. Like, now's the time to build, right? If you have any interest in researching this or starting a business or getting a job in Bitcoin, which historically it's been kind of hard to make money in Bitcoin, like, now's the time to, like, just go on somebody else's podcast, start a podcast, do some long form posts, like, just do something if you want to kind of, like, get involved, get active, because literally, who knows what the future holds. But, like, all I'm hearing call after call after call is, we're looking for a CIO, we're looking for a digital strategy person, we're looking for like a capital markets person, we're looking for an advisor. And it's like, the opportunities are finally starting to percolate, which is arguably pretty exciting. And hopefully, with all this corporate adoption, it's like we can actually build something, and hopefully, fingers crossed, knocking on wood, like, stuff doesn't blow up in our face, because, right, we're in the next chapter now. We're not in last cycle or 2 cycles ago.
Yeah.
Oh yeah.
If you want to get a job in Bitcoin, just start talking about Bitcoin. Like, nobody knows you exist unless you, like, well, it's a bit harder to know people exist without talking in the space, for sure.
And Adrian, to your point about, every time you jump ship, or, you're going to have a little bit of friction there and maybe lose, you kind of have to ask yourself, are you an investor or a trader? Because a lot of the gains that people are seeing, like, yeah, if you got into strategy and it's just the same price it was a month ago, and then you see people getting outsized gains with Metaplanet or something, a lot of the people that are posting about that are traders, and they're very good at it. And if you're an investor, you have to ask yourself, can you do what they're doing? And if you can't, then maybe you have to just kind of, like, remember your diamond hands Bitcoin training and not try to do something that you're not really capable of doing.
Yeah, you call it chasing the squirrel. I call it chasing the rabbit. Like, interchangeable commentary is the same thing. If you see someone posting that they made X amount of dollars on whatever trade, and you try to chase that, you're going to get blown up by the mere fact that you're chasing it. If you were a trader, you would have seen that move and you would have anticipated that move. If you see someone else make a move and you're trying to follow that, you're likely going to get blown up in all likelihood, unless you have the conviction to hold through up and downs, and you're just kind of switching positions from one to the next. But most people aren't doing that. They're getting spooked from one position into another one, and then they're going to get spooked from that one back into the old one, and they're going to constantly be chasing, and they're going to burn all their capital.
Yeah,
that's what I'm seeing happening a lot.
I think
because if you get in late, you might have missed some of the gains, and if you don't get out early enough, then you get stuck holding the bag.
Yeah, I think it's good to evaluate consistently evaluate your investments. I think all investors should do that. And with MSTR in particular, you sit back and you look at it, and it's like all the math still mess. Like the scale is there, the mode is there, the financial strength is there, the products are there, the toolkit's there, and there's nothing that, like, for me, again, this has been like I go back to this story all the time. I have like uncles in the past that have told me, I could have bought Apple at 82 cents. And, it's just that story, when I was younger and I was like, well, you didn't, it's like, you could have bought Apple at 82 cents, but you didn't. And even if you did, would you have held on to it? Probably not. You probably would have sold it for, $10,000 to go buy a Honda Accord. Just I don't want to ever have that story. And I want to know that I feel like I have the best trade of the next decade. And that's what I've been searching for. And I feel like I found it. I mean, Bitcoin, I found it with Bitcoin. And then it was like, oh my God, here's a company that's completely going to transform how the world operates by using Bitcoin and using the Bitcoin as collateral in different use cases in different forms. So, it's pretty hard for me to kind of change my perspective on that. Like I can't undo the math, right? Like I can't, take the math down. I look at the math of some of these other deals. Some of the other deals may move faster, but you're also taking on tremendous risk in all of these other deals that is hard to conceptualize because this market has never existed before. Right. And I think a lot of the market is really miscalculating risk on some of these other plays, primarily like liquidity risk and how to get in and out of these different instruments. Right. If you've got to call your broker on the phone to be able to invest in a product in a different international jurisdiction, imagine how hard it is when you want to sell that one. And what if you want to sell it when everybody else wants to sell it? And what if there are no buyers when everybody else wants to sell it? So liquidity starts to become really paramount in some of these, especially if you're in scale on any of these deals in particular.
Well, yeah, I did a post about that like it was last week to be very, very careful if you're doing these OTC trades in size, because you can get caught on the wrong side of liquidity very easily, and people jumped on me all over it, and they're saying that the liquidity for MetaPlanet is fine when I mentioned like 3 or 4 other ones as well. So that's a good point. And someone in the chat said that people are rotating from MSTR into other things and they're not shifting around after that. Yeah, I call shenanigans on that. If you're like, we are seeing what people are saying, and if you're getting spooked out of MSTR into another position, you're trying to tell me that you're not going to get spooked out of that one. When you see a 40% drawdown, you're all of a sudden going to have the conviction to hold on to it. And have diamond hands when you got out of MSTR because it wasn't giving you enough returns. I don't think that's the case. I think that people are chasing gains, which is fine. But if you're chasing gains with your whole position, the likelihood of you timing that move correctly and staying in it long enough to get your position to where you want it to be are significantly diminished if you are the kind of person that's going to be shifting from one position to another. Now, if you have a position and you perhaps leverage that position, or you have excess capital that you put into a different position, that's a different comment. That's a different kind of a scenario. But if you shift your money constantly like that, if you don't really plan out what you're doing, you're going to get burnt. And I'm talking as someone that's done that in the past and gotten burnt. So be mindful of what it is you do, because the second you think you're smart, the market's going to slap you upside the head and show you that you're not.
Yeah, and where does everybody go in a flight to safety? What's safe?
Yeah,
what instrument do you want?
That's the perfect point, because this one's for you, Jeff. I know you like to talk about insurance, you like to talk about reinsurance, you like forest fires, and you probably talk about reinsurance if there is such a thing.
Retro, there is. Yeah, retro.
Is there? Okay, of course there is. But like there's, and talking about the bear market, there's trees that require a forest fire to actually reproduce.
Redwoods.
Like, yeah, no, there's a couple other ones, but the seeds won't sprout if there's no forest fire. And if you think about that as a bear market, the forest is going to get cleared, and there's going to be some big ass trees that survive, and then the landscape is going to be favorable for those survivors. But some of these, SPACs or whatever that sprout up, they might not be mature, and they might not be able to survive that. So, choose your company that can survive, or even better, thrive.
Yeah, retain, like have this kind of retention strength, like strength in retention, the ability to withstand any market turbulence. And there's safety in that, right? And it's so interesting. It's like the market is treating MSTR as like almost like a stable, like you know, a stable company, but they are a growth company. Like, make no mistake, MSTR is a growth company. Like, yeah, the technical Bitcoin yield may be lower, but if strategy adds 500,000 Bitcoin in the next 12 months, right? Like, that's going to push Bitcoin higher. That's going to push any historical earnings higher. That's going to double Bitcoin per share with safety, right? Safety and liquidity. And like that should carry a premium. Like, that should carry a significant premium. And it's funny. I mean, we put Jim Chanos up on the screen at the very beginning, and he was part of our episode picture. But it's really interesting that I don't think he's really grasping or conceptualizing like these the preferred instruments and how powerful these preferred instruments are. Like, not selling MSTR stock and still being able to buy Bitcoin and add Bitcoin to the balance sheet without using the MSTR ATM. Like, that's monumental. Is like absolutely massive, huge.
He's making a slightly reworked version of Kerrisdale Capital's argument. That's all he's doing. Which
he's probably got more money too.
Well, right,
maybe,
and less drug dependency. But the reality of it is that, yeah. So what right now what's going on is that strategy is a victim of their own success. The reason why I've been using the economy example is that economies are stable. They're going to see ebbs and flows, but I think that what's going on is that they're building out a stable economy and they're going to keep scaling it. And once the market gets wise to that, that's when that additional multiple is going to come on. And it's not going to be about, you know, just how much Bitcoin can they accrete onto the balance sheet. It's going to be about the fact that they are now a monopoly. They have this entire economy built out around them. They have all these new offerings. Well, they're not new anymore, but they have these offerings, and they're probably going to scale the offerings. And I think, to your point, that's where the additional multiples are going to be seen. Because what do you do when you have a company that is near $1 trillion in market cap? They have dividend plays. They have all these different offerings on the balance sheet, and they keep accreting an asset that keeps appreciating in value year over year, you know, 4-year cycle over 4-year cycle, and it's just going to keep scaling. Eventually, the market's going to get wise to that, and the market's going to price in a multiple. The challenge with it is that I think is that the market first has to understand Bitcoin, which they don't, and then they have to understand strategy, which sits on top of it, which they clearly don't. So we do have a bit of a learning curve that's still in front of us that we have to weather. But I think that we're going to get there. It's just that people need to have a longer time horizon.
Yeah, he's fun to follow on X, but I think he said something along the lines of, well, I'm just doing what Saylor's doing. I'm just selling strategy and buying Bitcoin with it. And that sounds clever and all, but actually I kind of had a similar thinking, you know, being a covered call seller. I was like, well, you know, if Saylor's doing it, I'll do it. But see, I actually understand that when it rallies and it rips your face off, that my shares are getting called away. Like, I don't have this delusion that that's not a risk. But the way that he's describing it is actually fundamentally flawed, because in order to short it, you have to borrow the shares and then immediately sell them. So you need the price to go down. Saylor doesn't need the price to go down to win. And not only that, you actually have to pay interest on the shares that you borrowed. So there's a carry cost. So if you don't get, you know, if you don't win that bet in 30 days, 60 days, 90 days, 180 days, you're paying interest the whole time. So it's a completely different scenario. And like, you know, Saylor doesn't have to cover if the price goes up. You know what I mean? Saylor's not getting squeezed. He's got an infinite money printer because the way that a company is formed, he can just print as many shares as he need to. And he's got the preferreds where he can buy back the stock if the mNAV contracts. So it's not at all like short selling, you know, even if it sounds clever to say that.
Yeah, and Ryan just said one of the points that I've been making a lot, and what a lot of us have been making. Saylor's a net buyer of Bitcoin. He doesn't care about the price. He's price agnostic. So regardless of what Chanos is trying to do, Sailor's just going to keep buying Bitcoin.
And I think this really all comes down to the collateral component, right? Like so many people are continuing to miss this. And I'm going to try to make this incredibly clear. So hang with me here. So Bitcoin is collateral. Okay. Bitcoin is the best collateral the planet's ever seen. It's fully liquid. You can trade it 24/7, 365. You can see it. You know where it's at, yada, yada. Now, so somebody made the argument earlier today in Twitter. It was real estate has yield. Bitcoin doesn't have yield. And I was just like, oh my God, people are still missing it. People are still missing everything that's going on here with MSTR, right? Like real estate, right? If you hold a piece of real estate, you're using that collateral to generate like rental income, right? That is a yield that you are getting off of parking your capital in one location. Now, same thing is happening here. It's just in a little bit of a different format, and it's a little bit weird because it's never existed before. Now, Strategy, they hold Bitcoin on their balance sheet, right? They've got now 592,000 Bitcoin on their balance sheet. Okay, that's a ton of power. There's $62 billion of power of the best collateral that the world's ever seen. Okay, so they're holding all this money on their balance sheet, and what can you do with it? Well, they are collateralizing different tranches of risk on their balance sheet. They're using the position within the capital stack as different risk return collateral tranches. And the reason they're able to do that is because they are holding all of this Bitcoin. And every instrument, every time they use the ATM and sell Strife or sell Strike or sell $1 billion of Stride, they are yielding dollars from holding the Bitcoin as collateral. So they're able to make a yield on holding all this money on their balance sheet. Now, by structuring these instruments up into the capital stack, MSTR takes on the most risk. STRD is the next closest to risk. STRK next closest to risk. STRF gets further away from risk, and the convertible bonds are most senior. So those risk return profiles, you're giving away, if you buy any of those products, you are giving away upside in return. You are giving away upside in return for downside protection. So in those circumstances, MSTR shareholders are taking the excess upside and the excess downside of the Bitcoin risk, the collateral. Me, as a Bitcoin maxi, triple maxi, I take that risk all day, every day. And because I don't think Bitcoin's going to zero, I think it's going to infinity. And I want to be part of that trade. So that's how I view it. I think people just are not conceptualizing this collateral component. Like this is really powerful. And that's what makes this whole thing work, is they're going to go convince capital buyers, fixed income buyers, that, hey, dip your toe in the water's warm, come buy this instrument, it's 6 times over collateralized, buy all of this Bitcoin that I hold on my balance sheet. That's it. That's how it works. They are earning yield on Bitcoin. It's just in a non-traditional way. So does that make sense?
Well, for us, yes.
Yeah, it's just like, yeah, I think just a lot of people aren't, they aren't like wrapping their heads around it. So yeah, it's just an interesting, I think it's really helpful to just say that over and over and over again, because they are generating yield. Everybody's like, oh, I thought Strategy was going to be a Bitcoin bank. Well, guess what? They are. They're doing it right now. But the size and scale that they're able to do it is for a $600 trillion market. They're not, they don't have to build out banking infrastructure and deal with all these regulators and hire 10,000 people to run a, regional strategy banks all over the place. Instead, they've got a capital team of 5 issuing $1 billion of a fixed income instrument on a fucking Friday. Like this is the most efficient usage of the Bitcoin to generate Bitcoin yield. And people just aren't conceptualizing that. Like this is it. This is the best idea. They've got it. They're sitting on it, and they have a moat that nobody else can tap into. Right? The size and scale is just like they're 50 times larger than MetaPlanet.
And how bullish is it that they share the playbook in and of itself? Like, back in, I think Tesla's got some things that they could have patented, and they're just like, nah, screw it, we'll open source it, because they know that their lead is insurmountable, and that's the position that strategy's in. They can just open the playbook to anybody who wants to reproduce it, because who cares if they even caught up? That would just pump Bitcoin. Like if there's
higher.
multiple companies out there with 1 million Bitcoin eventually, it just pumps their bag. And like you mentioned the preferreds, and like a billion in the Stride, the third preferred coming out, that was just like a big swinging STR capital D moment. You know what I mean? Like there's no way that anyone else is going to catch up with the levers that strategy has at their disposal.
No.
Yeah, there's no way. And somebody was also saying that. Hold on, Adrian. Somebody was also saying like, okay, at a future point in time, won't everybody just sell their MSTR to buy Bitcoin? And the answer is no, because a lot of people will, right? A lot of people will be buying Bitcoin and do their Bitcoin thing. But at some point, like you have so much Bitcoin, it doesn't matter. Like if I have more Bitcoin or if I have more MSTR, at some point it just doesn't matter anymore. Right. And so at that point, the reason you wouldn't do that is because I personally, Jeff, can't go issue investment grade Bitcoin backed preferred equity instruments on my own portfolio at 3% yield. Like right now they're paying 9 or whatever they're paying, but they're going to go down to 3, and they're going to be able to issue billions and billions and billions of dollars of capital at like a 3% interest rate. And I can't do that. There's no way I'm going to be able to do that. And that's the power here is like, they've got all this money. They've got the toolkit. They're able to do things that we can't do. And that many other companies can't do. So, and the scale of that is just like, it's like magnitudes greater than other companies. So, like it's just I wouldn't, I guess what I'm trying to say here is I wouldn't get depressed at the price action and just like zoom out, sit on your hands, turn off the internet, just like go out, touch grass. This is dead man portfolio stuff. Like you hold on to this for the rest of your life. And apparently I have nukes.
Jeff some list that had a jet with nukes, and you were on it today, and I just noticed what the hell that was about. But or the name Jeff was on it rather. No, but yeah. So the thing is, I do think that there are a lot of individuals in the market that don't understand Bitcoin, they don't understand financial markets, they don't understand capital markets, they don't understand the preferreds, they don't understand how they operate. And you're right, we're gonna have to keep repeating that message over and over again before it kind of settles. And when it really does, I think that's when everyone's going to have the moment when it comes to strategy. And what price will we be at by that point is the question. So for those that are in it now, if you can sit in your hands and enjoy the next 4 years and see where we're at by the next cycle, because if you look at where we were in 2020 to now, I would not have thought this was possible. That they would be approaching 600,000 Bitcoin. They would have a massive options market. They would have all these offerings. So what are they going to be able to do in another 4 years? I think that people really, really need to sit down and think about that. Like take a look at what they've done, take a look at where they started, and just project that to the future. And I think it could give you a little bit of clarity.
And I'm going to hit on this question here. Why will 3% yield be attractive? Because I think it's an interesting question. And I've said this multiple times. I think STRF will be the risk-free rate at a future point in time. So think about, why is the US 10-year treasury at 4% attractive? Because you know you're going to get your 4%. Right? Like that's the only reason it's attractive, because the US government can print money. You know you're going to get your 4%. It is the risk-free rate. There's a reason it's called the risk-free rate. They can print money. Now, at some point, if strategy continues to grow at this pace that they're going to grow, and they're sitting on 2 million Bitcoin at a future point in time and a 10% leverage ratio, STRF is going to be the risk-free rate. Like that is your zero risk instrument. That is like what you're going to compare the rest of the market to, is some sort of like risk-free rate, risk-free interest rate. And this concept of strategy as a bank, right? A lot of people, and we kind of got to this at the end of our last episode, where we were just kind of conceptualizing like a world where you can store your energy without decay, and everything in the world needs to be redesigned, right? Like, let's think about a bank of the future. Is the bank of the future a debt-based bank, or is it an equity-based bank? Right? Because all we know about banks right now is they're debt-based. What about an equity-based economy? And you have these other instruments that pay you into perpetuity over time, and that's maybe that's how society gets paid, is they hold all these equity instruments instead of debt instruments, because they're all benefiting from the global economy shoving their energy and storing their energy in the best asset on the planet, and that flows through to strategy, and you're getting paid to live your life by holding these equity-based debt, these equity instruments instead of debt instruments, right? Instead of lending against your Bitcoin, what if it's an equity instrument? So I don't know. I think the whole world needs to get redesigned and rethought, like on a Bitcoin-based system. It's really tricky. And it also makes when you go to the outside world and try to talk about this stuff, that part starts to make you sound like you're in a cult, right? Man,
I'm okay with it.
I went and got beers last night, and it's just like, with some of my old reinsurance coworkers, and it's just like kind of blank stares, like, what? Oh my God, what are you talking about? And I use them as the bellwether. Like, I think all of the people I used to work with are really smart people, all in their own individual ways. But this hasn't even clicked yet. It hasn't been a priority yet. They're all complaining about their comp. They're all complaining about their bonuses. It's not rising as much as they thought. They're working harder than they've ever worked. And, that same problems that I was kind of going through when I was kind of back into meat grinder. And it's just a not very exciting place to be.
Yeah, I think they're going to have to put like no talking about Bitcoin on the rules of the sauna outside the door. Because that's all I want to talk about. I'm stuck in there for 20 minutes.
You're like stretching and talking about Bitcoin. That's funny. That's hilarious.
Oh yeah, every time.
Okay, guys, what else? What's next on the agenda? Use cases. I mean, Solei, you wanted to hit on use cases. You want to hit on that?
Yeah, I mean, I think all of these Bitcoin treasury companies that come out, and Mason and Dan provided a framework. I think that was 2 episodes ago. And we're going to have to start figuring out a way to determine what Bitcoin treasury companies are legit or not. Because when there's hundreds to choose from, and you want to have multiple positions if you believe in second best, I guess. And so I like to think about shit coins as listing their red flags. Like when someone tells me, oh, they made money on such and such altcoin, I don't attack their altcoin specifically. I just say, look, for me, red flags on crypto are, pre-mine, proof of stake, centralized, and no fixed supply. And I don't attack their asset directly. I just let them think about it. And if whatever they're investing in has any of those red flags, I just let them, figure it out on their own. And I think we can probably do the same thing with Bitcoin treasury companies. Like, do they have cash inflows via products or services? Or can they create these, financial products like Strategy's doing? And someone was asking earlier, how do they pay the yield on the preferreds? And the answer is they either pay for it with the money that they're making, or they can, they can sell ATM on the common stock shares if they have to. But as long as that's less than, the cost of that is less than Bitcoin's CAGR, then it's accretive. So,
right.
Bitcoin is the hurdle rate. That's basically what I'm saying about that.
Right. It's like refinancing your debt, right? Like, I don't know if, if you need to refinance your house for whatever reason, you can go out and do that. Again, I think I said this last week. Honestly, I should say it every single week, right? Strategy holds $62 billion of Bitcoin. They hold $10 billion of debt. So they have $50 billion in net capital. Let's say if the price of Bitcoin fell 50% tomorrow and it goes down to 50 grand, they're going to have $30 billion of assets and $10 billion of debt. I'm going to underwrite that loan all day, every day. Like I want to take that risk. And there are going to be other people in the market that are going to be throwing money at them. Yeah, the terms may not be as great as what they've got right now, but they're going to be able to raise capital because they still are in an incredibly strong position. Even if the price of Bitcoin goes down 60% or 70%. I mean, if that were the case, I mean, Strategy is just going to buy all the Bitcoin, right? They're going to issue so much stride. They're just going to buy all the Bitcoin. And it's going to go back up.
Yeah, and these other companies, it's going to be, that's another thing that you're going to have to look at is, are the things that they're doing with their Bitcoin encumbered or not? Like, I think Strategy's, one of the first deals that they did, their Bitcoin was encumbered, and then they were able to get out of that deal, and they're like, no, we're not doing that again. But I don't know, you might be able to get more favorable terms, right? If you're actually putting the Bitcoin up. If you're small,
True.
I mean, Strategy's already kind of gotten escape velocity at that point. They can get, favorable terms. But these other companies, that's going to be something that you're going to have to evaluate. Have they said that they will or will not sell their Bitcoin? Will they loan it? Will they borrow against it? And like I said, will it be encumbered or not? It reminds me, some of these companies, it reminds me of, it was during the pump after COVID. And I don't know if anybody remembers when people were trying to chase the next Tesla, but this company named Nikola came out, NKLA. And there was a merger with VTIQ, I believe it was a SPAC or whatever. And this guy, this guy ended up getting convicted for fraud, right? So you got to be careful changing the next strategy, right? Things like, we were hinting around at like the pipe investors and whether there's a lockup period, or whether they can just dump on retail as soon as they get their shares, things like that. These are all things that you need to take in account, whether there's just hype or whether there's, history of shitcoinery like Amara. They used to mine Caspa. So there's all of these things that can tip you off for red flags.
Yeah, I think that.
I like that.
I think that's a valuable point. So, I mean, right, we've got these new deals are coming into the market, and they are. It's helpful to look at the terms and how the terms are designed, because those concepts of like the altcoins, right, like a pre-mine or a pipe, right? They could be you kind of think of them almost similarly, like as a pre-mine. You got coins before they hit the market. It's like, well, what's a pipe? A pipe is a private investment in a public equity before they go public. So they're getting access to shares, but basically before they're going public at a cheaper price. And I think it's valuable to look at what those look like. And, I'm not saying that those are going to kill the stock completely, but it might be a really volatile time. Like once these deals close, it could be really volatile as everybody's trying to figure out, like, okay, what is this thing actually worth when all of the shares are available and publicly trading? And the interesting thing is the lockup periods for those, which it seems pretty crazy, but I think the market has shifted such that those people that have those pipe investments just have very little lockup, like little to no lockup. So once the deal closes, their shares are potentially liquid, which is just a unique thing to keep in mind. If you've got people that are sitting on a 10x as a deal closes, they might be looking to capitalize on the 10x as the deal closes, because you never know where their funds came from. And people are wondering, like, oh, who's selling Bitcoin right now? Well, it might be Bitcoin OGs selling Bitcoin to go invest in pipes to get instant 2x's. and pull that out and go buy more Bitcoin. So I don't know. We might. I think
that is what's going on.
Like vol is compressed right now. Like somebody mentioned or asked about like what's up with the IV on MSTR. Well, it's like everybody's selling. The people that were buying, the retail that was buying options are, you know, vol traders. They love the like quick money, quick hits, right? So they're taking that capital and they're shoving it into Smarter Web Company and MetaPlanet and these other instruments because they're chasing those types of returns as options traders. So that changes the volatility profile of these different instruments. So I think that's kind of what's going on in the marketplace right now. But I mean, it's tough to say.
Not financial advice, but you know, I'm not touching their Naka with a 6-foot moto until after the lockup period's over with.
There could be opportunities to scoop some of these things up at depressed prices at some point in the future. So.
Yeah, but one of the reasons why I've been saying that all season is dead is because the Bitcoin ecosystem has swelled to such a point that the treasury companies are acting like the alts, like we've all been discussing, right? So people are chasing these altcoin-like gains with these other treasury companies. I'm not saying whether that's good or bad, but what I am saying is like with most highly sentiment-driven, frenzy-driven things, there will be a crash. And after the crash is when you're going to find out what's what. So you're going to find out, you know, is company A going to survive versus company B? And are you going to be the person, again, like I was saying earlier, that's going to be smart enough to get your money out before that happens? And if they do have lockups, if they do have all these other things, you really need to dig into what these companies are doing versus chasing the pump. So there's definite considerations that come into play.
Yeah, and look, I'm not necessarily trying to convince people to go crazy in any one direction on one of these things, but I think it's helpful to think about like why you hold things. Like, why are you holding something? Why do you hold any equity? Why do people hold Microsoft? Why do people hold Apple? It's for a reason. It fits into their portfolio. They've got some sort of design. So it's like, okay, well, why do you hold these other instruments? And are you willing to ride it if it drops 80%? I don't know. I mean, I think I bought MSTR in 21 at like 970. And I wrote it down to 122. I was like, holy shit. At that point, I was just, you know, finding money under the couch cushions to go buy as much MSTR as humanly possible. But I took it on the chin and I had to sit with it. I've taken it on the chin 4 or 5 times since then, right? We've like wrote it to the top, wrote it back down, wrote it to the top, wrote it back down. And it's so funny. I think the Bitcoin therapist posted about this. Like he just posted the chart. People are really fading this chart. It was like the 5-year chart of MSTR. And it's like, you see this like little blip over, 21. And now you're like looking at this chart that's just like literally straight vertical, like the last year. And people are freaking out because, intraday MSTR to IBIT is down 25 bips because you've got short sellers in low volume when people are chasing shiny things. It's just weird.
Yeah. And I'm not, and look, this is not us judging people for anyone that's watching this, because for instance, I bought my first strategy shares on leverage from my Bitcoin holdings, right? So I borrowed against my Bitcoin and I bought strategy with it. So I'm not saying that it's a wrong thing to chase gains. What I am saying is, do you have a plan? Do you actually understand what it is you're doing? Some of these companies have been around for what, like a month, 2 months that are really running right now. Have I held positions in them? Yes, but by the same token, I understand what it is I'm going after, but I also understand what the primary goal is. I'm not selling my Bitcoin. I'm not selling my strategy to do it. So, granted, not everyone is in that position, but just be aware that if, like Jeff just said, are you prepared to take it on the chin? Because I don't want to see in 3 months people in the threads on Twitter talking about, oh, this company sucks because I bought in a blah, 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 and I lost all my money. It's like, well, that's kind of the risk that you're implicitly undertaking when you get involved with an equity. You're taking on that risk. Just same thing as with strategy, the same thing as with Bitcoin. So just be mindful of that and be aware of not just the pump, but also the dump, because one sometimes follows the other.
I mean, that all that said, I'm still incredibly bullish on the future of all this stuff. It could be weird, right? There's going to be weird things that happen in the next 8 months, and upside and downside, and be prepared for it.
Yeah, there's room in the forest for a few other trees. They're not all dogs. You know what I mean? There's going to be some good. So there's going to be some good ones.
Mm-hmm. Absolutely.
But you got to own the outcome though, because you're not gonna share your gains with people. So don't. I mean, this is gonna sound harsh, but don't share your losses either. Right? Like, just own it. You made the move. You took the gains. Great. You take the loss. Sorry, but investing is not a team sport.
Yeah, don't gladiator your positions. I do think we're in a great period of time where to like just not post positions, even if the next 2 or 3 months do see a sort of rally. Just stay calm, because there's a lot of juice left in the tank, and think long term. It's really interesting. I think all of this stuff might come to a head at the same time, right? Obviously, the Fed held interest rates flat today. We saw that. And you've got the president screaming at the top of his lungs to drop interest rates, saying that he could do a better job of being like the chairman of the Fed than Powell, which is an interesting commentary. But I mean, he's got 9 months left on his job before somebody else is hired or put into place. So I think at least there's probably going to be some interest rates coming down at some point in the future. So what does that mean? Like, what is the impact on that? Interest rates come down, means the cost of capital comes down, not only for the US government, but for everybody else on the planet, right? Like, you want to go buy a home, it's cheaper to go buy a home. You want to issue debt as a company, it's cheaper to issue debt because the risk-free rate is going lower. So what does that mean? That means all the preferred instruments that Strategy is offering, the interest rates on those the yields of those are going to fall, and the prices of those are going to rise, which results in even significantly more torque on the MSTR balance sheet, because they're able to issue capital at a cheaper relative rate. So it's going to be more efficient in how they're buying Bitcoin into the future. And generally, the interest rates coming down is bullish for risk assets. And we're at this unique segue where Bitcoin is this like combo risk on asset and risk off asset at the same time. And you've got MicroStrategy is like this asset that's holding, more of the risk on and risk off asset at the same time, and with a significant moat and an ability to monetize different market structures in different ways. So, I mean, that can happen Q3, Q4 on top of potential S&P 500 inclusion and just market frenzy when all risk assets blast into new all-time highs with potential quantitative easing, and the money printer just starts humming and the world starts moving faster. So it'll be interesting timing, I think, the next couple of months, the next couple of quarters, just watching all of this come together. It's almost like a huge story is coming together at the end of the year.
Well, so like, what if we play a little bit devil's advocate here? I think you're right about interest rates, but what if Powell decides to say, "I've got however much time left, I'm not going to lower interest rates unless absolutely 100% forced to do so." At least like the market conditions force him to do so, or something along those lines. But if conditions remain within a tolerance that he can somehow justify not lowering rates, or lowering rates very, 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 very little, and we have a prolonged cycle as a result. So we still have tariff uncertainty. So let's say that takes a while to like rectify. Interest rates don't come down as much as the market thinks that they should, and we have a prolonged, not a bear market, but a prolonged lull where we're just kind of trotting along 100,000 and MSTR at what it is for the next 6 to 9 months. Like, are people mentally prepared for that outcome as well? Because I think that would be the worst outcome for a lot of people, because to Soleil's point about people getting bored, I think the boredom will go from boredom to frustration to despondence very, very quickly. And we're going to start to see a lot of people exiting the market. And then when the market turns, interest rates come down, uncertainty and whatnot goes away. Liquidity also is going to be on the uptick by that point as well, significantly. You have people chasing the gains again, and then we're going to pump even harder than we would have before. So I just think that people need to understand what they hold and be patient if you can, and just sit on your hands. That's the best thing you can do, whether you hold Bitcoin or strategy. Sit on your hands is the best approach.
Yeah.
The only time I've really gotten hurt is when I try to get cute chasing things. Sorry, go ahead, Tim.
Yeah, no, it reminds me of the one comment Ben just made in the chat. It's like, it's hard to recover from a negative 80%, meaning just protect the base. It reminds me of somebody posted recently, if you don't already own one Bitcoin and you're investing in this stuff, like, I don't know what to tell you. And like, investing is an individual sport. Hashtag Ben Workman. But it's like, yeah, like Bitcoin and then everything else.
Protect the base, grow the base.
Yeah.
Yeah. Think about
and then once you grow it, don't sell it. My God, the people selling Bitcoin for all these other plays are just blowing my mind right now. But I'm not going to judge. Whatever.
Yeah, there's a bunch of tickers. I can't even keep track of the stuff that people are.
Oh my God, it's so crazy. Like,
I'm tweeting about them, so I know some of them, but there's going to be more that pop up for sure.
That's a full-time job. It's a full-time job, like identifying these.
I can't deep dive all that shit.
No way. I mean, you'd have to be just consuming content 24/7, 365 at 2 times speed, and that's difficult to do.
Yeah, that's corporate media. Like if you get on there like, oh, Money Now or whatever, they're going to come up and they're going to talk about 10, 15, 20 stocks or whatever. A financial analyst cannot be an expert in 20 stocks. We cover one, and it's a freaking full-time job. Like, I quit my job and I just work harder researching one stinking stock than I ever did when I had a W-2 job.
Yeah. I mean, it's real. It's totally real. It's hard to keep track of all of these things that are going on. But I mean, especially to pick, like, if you were to add another stock to your portfolio, I mean, that's why it might be interesting to hold some of these new instruments like OwnB, or if you just want like that extra exposure. But I think it'll be interesting to see like how that even evolves, right? Like, are we going to start to see like instruments that have all of these Bitcoin treasury companies, but not include miners and not include strategy? It's just like think of it like a growth fund, like the Russell 2000, but for Bitcoin treasury companies that are under $5 billion.
That's coming.
Right.
That's for sure coming.
It's just going to be people like throwing capital at these things left and right. And then you get diversified exposure that way. Or, I mean, alternatively, you just go throw money at all of them, try to do it yourself. But yeah, I think that's how the space evolves. Is you're going to see all these new instruments, new products that are just kind of wrapping all of these pieces in different forms. Or, I mean, I'm just imagining a product like 50% of these tiny Bitcoin treasury companies and 50% Strike.
There's all kinds of blends you can do with it, though. That's the thing.
Just do like infinite.
Yeah, you can do all kinds of blends. But like, look, so I know I've been posting about these things, and the thing about it is, and everyone that DMs me about them, one, I don't give them financial advice, and two, I make sure to tell them I have not sold Bitcoin, I have not sold strategy, right? So I'm leveraging it, or I'm using excess capital that I have to open new positions, and even still, proportionally, that is nowhere near the size of my strategy position or my Bitcoin position. My Bitcoin position is larger than my strategy position. My strategy position is exponentially larger than the positions I have in these other companies. That's not me disparaging them. That's not me saying that I think they're bad investments. That's me saying that I know that they're risky plays, and I know, as we've discussed here, that they're essentially the altcoin plays of this cycle, right? There's going to be boom, there's going to be bust. So I'm aware of that. To those that are selling their entire positions of whatever, be mindful that that's less an investment and more of a gamble. Now, if you're okay with that gamble, more power to you. It is your prerogative, but just be aware of what it is you're doing, because a lot of these companies, I'm not going to say one in particular, but a lot of these companies are going to provide you with outsized return possibility, but it's also going to provide you with an opportunity to lose everything. And
hey, Adrian, sorry, what do you think about something like the Bitcoin standard ETF, where Like you're not even in the index. You're not even in the ETF unless you have 1,000 Bitcoin. Like, does that seem rational? Like with all of these new entrants?
Yeah, own B. So that was what Jeff was mentioning. Own B, you have to have over 1,000 Bitcoin if you want exposure to a lot of these companies that have over 1,000 Bitcoin. Now that's going to be miners, that's going to be strategy, that's going to be similar, that's going to be, I assume, GME. I don't know if they've included them yet or not, but all the companies with over 1,000 Bitcoin will be, I think, are going to be included into that ETF in varying position sizes. If you want exposure to all of them, that's a perfectly rational decision. I still wouldn't recommend selling your Bitcoin for it or selling your strategy to do it. But if you want to have exposure to all these companies and catch a potential upside, sure. But if you're taking all of your strategy, you're selling it, you're dumping it into one of these OTC plays, I'm just trying to urge caution there and understand that, yeah, they've been running hot, but can you tolerate losing that? Can you tolerate that 80% drawdown that Ben mentioned? And that's
protect the base. Protect the base.
Right. Like even when I do options, I do not go below my cost basis. I don't go in the money. I'm always trying to protect the base of whatever it is I have. So really understand that. Now, if you haven't made money, if you wanted to strategy and you're down, do what you gotta do. But even still, understand what you own. Strategy is more likely to go up and give you your money back over time, more than you are going to make the money chasing a lot of these other things with your whole stack. So just really, really be mindful of that. Have a plan. Sit down with a spreadsheet for Christ's sake and model some stuff out. Do something besides saying numbers going up, I'm going to chase it now. That's the only thing I want to say. Yeah.
Yeah, and just to address people in the chat, they seem a little concerned. Tim is drinking espresso in a hotel conference room at 11 p.m. Well, it's 5:13 a.m. local time, and the conference is starting in like 3 hours. So I'm just trying to wake up. Actually, right? There's a little bit of a time difference.
You're just,
6 hours
getting
ahead.
getting on the time.
Yeah, and don't worry about Tim and caffeine. He basically injects into his veins at this point, so he's good.
It's like True North in the morning is actually kind of feels great. Feels great.
So, Adrian, what you were kind of talking about, and I think the general theme that we've been discussing here is like position sizing is incredibly important, and the Kelly criterion comes to mind. And the Kelly criterion is like how to appropriately weight positions in like betting or gambling or options trading or even portfolio management. And the way this works, or the way Kelly criterion works, is you take the probability of a win multiplied by what that win is at a future point in time, like the long-term value of that win. And then you take the probability of a loss, and then what is the value of a loss, and that helps you determine like this expected value equation and how you should position size any particular trade. And so you think about like it makes you think about long-term trajectory of like any one of these instruments and why they could be where they could be at a future point in time. What's the probability of that? And so one thing that I've brought up a lot previously is this copycat risk that's in the market for a lot of these smaller entities that maybe aren't doing anything, earth shattering. Maybe they got some cash flow on their balance sheet and they're running an ATM. They've got some convertible debt.
They're not differentiated at all. Yeah,
they just may not be differentiated. So maybe they hold a lot of Bitcoin in their balance sheet and maybe they're growing it consistently, but there are others that are going to copycat, everything that they can copycat, but also doing, alpha strategies to go attack different capital pools and different capital markets that might be a little bit more appealing to hold relative to other companies. So having that additional energy and that premium on your stock is incredibly valuable because it allows you to be more efficient with these beta strategies that everybody else can do. And so it's kind of a self-fulfilling cycle of if you have a really good alpha strategy, it makes your beta strategy better, and it's going to pull energy and premium away from any company that maybe is just, using cash flow to buy Bitcoin.
And you have to be able to assess risk and opportunity cost because those are not the same thing. So if you're moving into these, if you're moving into these other positions, and so let's say you're someone like myself who has a lower cost basis for Bitcoin, has a lower cost basis for strategy. For me, I'm assessing risk, but I'm also assessing opportunity cost, which is why I leverage my holdings and I don't sell them. That is not something that is open to everyone. I understand that. Not everyone has enough that'll be enough to worth borrowing against. I understand that. But that's also one of the reasons why I maintain multiple streams of income. So whether I'm doing that from getting options premium, whether I'm doing that through my consulting, whether I'm doing that through whatever means, if I'm leveraging my holdings, I can cover drawdowns. I can cover the market turns, right? That's also part of my assessment. So even though I'm taking on additional risk, I'm also able to say that that risk is managed somewhat. If you think about what Jeff talks about all the time with strategies, leverage ratio, if I'm taking out X amount of dollars and I know that I'm going to have to cover Y amount of dollars if we have a prolonged market drawdown, I make sure that I have that amount coming in. And that's part of the calculation that I do before I make any of these plays. So when you see me post about something, I've already been looking into opportunities and way to leverage my holdings for new opportunities weeks in advance. That is how I'm able to make the move. That's what a lot of traders are doing. That's what a lot of individuals that you're seeing posting these things are doing. They're not chasing the rabbit or they're not chasing the squirrel. They've made a plan. They've made an exit. They have the capital to allocate to a new position, and then they do so when they've done that assessment. So be very, very mindful of what you're doing, because I really don't want to see come the end of this year, strategy goes to $1,000 and someone's like, I should have just stayed in strategy. And all we're going to be able to do is tell you, well, yeah, you shouldn't have taken your whole stack and put it into company XYZ. Take 1% to 5% if you must, or if you're able to do it on leverage in a safe way because you have capital coming in, do that. But all the YOLO posts I'm seeing, first about Misty and now about all these other auxiliary OTC plays, it just makes me very, very nervous. And I've been posting about them, but even still, in every post, they say, "Can you manage risk? Do you understand the risks?" And everyone kind of forgets that last sentence and focuses on, well, how do I buy this? How do I buy this? How do I buy this? Sorry, Jeff, go ahead.
Yeah, no, you brought up Misty, and I think it's probably a good time to chat about Misty. I mean, I know Solei, you've done your MSTY competition. We should get an update on that, but maybe while you pull that up or before you pull that up, when I noticed some statistics on Misty, and I saw like a new trend in the Misty community and the Misty thread, and the new trend is shifting part of their Misty position into winter. So,
oh God, no.
winter, yeah, yeah.
I mean, not financial advice, but okay.
Sailor said there is no winter.
Sailor
said there is no winter.
There's no winter. Right. So, but what I've seen now is like 70% Misty, 30% winter. So, right. So Misty is selling covered calls, and then winter is cash secured puts. Is that what they're doing? Or no?
No, I think winter is
covered
short,
puts.
unless I misunderstand it.
Yeah,
They're
basically
short
they're short.
strategy.
Maybe it's covered puts. WNTR. Anyway,
So wait, they're rolling Misty the Misty dividend into winter?
No, they're positioning into both Misty and winter. Both trade strategy.
Right.
In different directions. And monetizing the volatility in different directions. Misty is
a hedge.
It's kind of a hedge, I think. So I guess if you think that there's going to be a bear market, maybe you want to be on the winter side. But if you think there's going to be a bear market and you everybody shifts their position from the Misty side to the winter side, maybe that relieves. I don't really know. Maybe that relieves pressure from all the covered call selling at the money. I have no idea. Anyway, it was just an interesting. I need to wrap my head around this, like what's happening there. But people are doing that. People are buying both and holding both in different positions. But I mean, think about the size and scale here. Misty is $4 billion of AUM, which is huge. You've got $4 billion of AUM that's selling weekly calls on MSTR every week, which is nuts. It's a lot of sell pressure. And then you've got Winter, which is now, I don't know, $27 million AUM. So just tiny in comparison. But if people start to think that we're going into a bear market, maybe that capital shifts or rotates. And Winter is a synthetic put. There we go.
Huh. Okay.
Maybe I don't understand it, because I do see that it's supposed to be an inverse MSTY position.
Yeah, that's what I'm a little confused as well.
Yeah. Well, I guess I'll have to dig into it.
Yeah, dig into that. I saw it today. I was like, wow, that seems odd. If it's inverse, so is that like, is it long? You know, I don't know.
Yeah, I don't have the time to even attempt to do that. So
yeah, maybe we'll put Solei on it. Solei, check out the trades. See what they're doing. I know what they're doing.
That'll be the next challenge. Out trade the Winter ETF.
How's your competition going?
Yeah, so when Adrian mentioned that people were getting bored with strategy, getting into Misty, and then they were getting bored with Misty and getting into something else, I knew they were going to get bored with it as soon as the most recent dividend came out and it had dropped from 10 to 7. And we're like, okay, here we go. You're not getting your regular 10% dividends, and it'll just be kind of on to the next thing. But yeah, so January 23rd, the covered call ETF positions since then is basically flat. They might have been down 0.5% or something. And luckily, I've been holding on to my small lead. I'm up about $5,000, which, over that 5-month period is only about 3%. But, it's doing better, even a little bit better than holding spot strategy over that time period. So, yeah, good enough. The real interesting part is going to be who captures the most upside during a rally. So I know IMST was claiming that they were going to try to position themselves to capture more upside, but they haven't really been afforded an opportunity to see if that's going to happen yet. So the next time we push to 650, 750, 1,000, whatever the next pump gets us to.
The leg up.
Yeah, the next leg up, exactly. It's going to be very interesting to see how those two trade. But I did notice when I evaluated both of their positions last week, they were both taking long positions. I actually liked IMST's a little bit better because they just were leaving some of their synthetic shares uncovered. That was their long. But MSTY was like, it looked like they were buying debit spreads like 10 to 14 days out. And I just thought that was kind of ludicrous. So not really a fan.
All right, we should probably do a separate episodes on both of those.
Yeah,
those things that are going on there, because I mean, you could do 5 hours of research and do a 5-hour episode probably on each one of these individual products, just trying to unpack like each one of their individual trades, which is why this whole space is so crazy, right? Because you could create so much content with just one product on one stock and spend all your time looking into it and how it works and why it works. Let alone people are out here YOLOing of $5 million market cap companies in the UK. It's just crazy.
Yeah. I covered both of those ETFs like 3 days in a row on my channel, and just, going every single day, downloading their positions, trying to match up the calls that they bought with the puts that they sold. Okay, these are the synthetics. And after 3 days I was like, I'm sick of this. I'm done. I can't do it anymore. Like I covered it. I was like, okay, this is what they're doing, but I can't do this every day. Like the first ETF that creates a dashboard like strategies with like metrics and like, all kind of stuff, that ETF will distinguish themselves from all of the others. Like I shouldn't have to go and figure out how much call away value they have built into their covered calls and how much premium per assets under management they're doing. Like I should just be able to go to their website and there should be a dashboard there. And then I should be able to compare apples to oranges between the ETFs and see those things. So if Jay and Jeff are listening, the first one to get that stuff, distinguishes themselves from the rest of the pack.
I would agree, and I think that they maybe should hire you to do some of this stuff because you can get some great insight into options. I think, quite frankly.
Yeah, they can't pay.
Yeah, there's probably no dollar number that they can pay somebody to do that. Oh my god!
Like, I'll do it for free, but there's no way in hell I'll do it for money.
I mean, do it. That means you're doing it for love.
No, I did it for that 3 days, and I was like, okay, I understand what they're doing. No more. I can't take it anymore.
Jeff, breaking news. Who's the special guest?
Special guest is Bobo. He
Bitcoin Bobo.
Bitcoin Bobo. Yeah, he's coming to hang out tonight.
Yeah, my dog is currently sitting outside my office door wanting to get in. I'm not going to let him in, though.
There he goes. He's off. Yeah, crazy. All right. Well, I think one other thing just to bring up, right? So MSTR hasn't used the MSTR. They haven't used the MSTR ATM over the last 3 weeks, which that has been the primary capital raise for MSTR for the past, I don't know, 8 months, right? And now they don't use it 3 weeks in a row, and the price of Bitcoin's still at $105,000. That's bullish to me. Like that means there's capital that's still coming in the door and buying this stuff and holding the price up, and there's significant demand outside of strategy in the market, right? Like, I mean, I guess last week they bought 1 billion, 10,000 Bitcoin, but still, I think it's really, really interesting to see like the relative strength of Bitcoin over this time horizon as well. Well, I think that's really all I got. Oh, should we talk about S&P 500 maybe? Go ahead, Adrian.
Yeah, so I was going to say that, and this just shows how quickly the market gets bored. Everyone watching this, do y'all realize we've been just like trotting along at 100K for how many days now?
Yeah. Well, like I don't know. Like, have there been 60 days above 100K?
Something like that. And I think everyone forgets that there was a time that on this call, we were saying, oh, when Bitcoin crosses 100K, it's going to be an epic moment. Because whenever the first time Bitcoin crossed 100K, everyone was so euphoric. And then they got bored with it within like 2 days. And now we've been trending at that price point. Strategy is teetering on having 600,000 Bitcoin. They've got all these preferreds. There's so many reasons to be bullish about what's coming on in the market that we just need patience. And I think that people are losing that perspective because I don't know if it's like they're looking for a dopamine hit or if it's boredom or whatever it is. If it's just boredom, but it's like, if you had told me in 2020 that we would have been at 100K and strategy been doing all this stuff, I would have been through the roof. So like, don't get shaken out by your own boredom. Like, just stay the course. If you've been in it long enough, you already know this. But to the newer people, stay the course. That's how you're going to make the money. That's how you're going to see the gains. That's how you're going to get the returns. Especially now. I mean, when we were suffering through the drawdowns of MSTR, we didn't have strike and stride. We didn't have the ability to get all these additional revenue streams coming in while things were going down. So now that things aren't even going down, I think that there's a lot of reasons to be optimistic, and let's just ride this thing out and see where it goes. But sorry, you're going to talk about the S&P 500.
Yeah, we've just the last 41 days in a row have been over 100K. Bitcoin's been over 100K. People are bored. They're getting their Amazon. They're getting their Amazon packages, and they're getting their Amazon packages in 4 hours. And they're like, I need this now. I need Bitcoin to go to 120. I need to go 150K tomorrow.
It reminds me of the 9 Inch Nails song. I hurt myself today to see if I still feel. We're just all dead, like waiting for, like, unless it's 125, 150, it's like, don't even bother me with the price.
Right.
Or maybe it's every day is exactly the same, and everyone's like, I believe I can see the future. Tomorrow Bitcoin is going to be 100K, and they're just like numb to it or something. I don't know, man. It's weird. It's weird how people have gotten this numb this quickly to Bitcoin being at this price.
Yeah, and maybe let's talk about that a little bit. And I'm trying not to jinx this stuff. But right, so we're thinking about Q2 earnings. Q2 closes in 12 days. Q2 closes in 12 days. Price of Bitcoin's at $104,000, about $105,000. If Bitcoin closes at $95,000, based on the amount of Bitcoin, if Bitcoin closes $95,000 on June 30th, 12 days from now, 95,000 or up, Strategy would have a $6.4 billion earnings gain in Q2. That would clear the last 4 quarters of negative earnings by $1 billion. So that's a huge, it's a monumental number, regardless of everything else, right? They added $12.7 billion of retained earnings to their balance sheet last year. So the Strategy made $12.7 billion last year. Now in Q2, this is over and above the $5 billion that they lost in Q1 because the price of Bitcoin went from, I don't know, $93,000 down to $82,000 at the close of Q1. And now we start with the base of $82,000 going up to where we're at today. So basically what I'm pointing out here is we got a lot of wiggle room. We've got well, maybe not a lot, but we've got a decent amount of wiggle room for Strategy, for the price of Bitcoin to potentially go down, and Strategy is still posting a monumental, like, positive net income gain that people will start to realize and recognize what's going on here. So even if the price of Bitcoin closes at $95,000, a Q2 EPS estimate of about $23 per share. If you just take, industry average, look at S&P 500 average PE ratio is 26, you're looking at a price of something like $702. So obviously there's a bunch of people that are probably in the chat and they're probably online and that they're talking crap about this. These earnings aren't real earnings, and they're never going to get traded or valued at a multiple of their earnings. Well, it's like, that's an agree to disagree thing. I think that every dollar of earnings is important. Like, why do you hold any stock? You hold stock for the long-term appreciation of the equity, which is a function of their financial strength, which is a function of like the amount of earnings and money that they can generate and retain for the long run. So I think every dollar of earnings should be treated similarly. So regardless of whether or not it comes from Bitcoin or it's fiat cash flowing enterprises. So I think that's exciting. I mean, let's just plug in 105 in here, right? So that's where we're at today. So if everything just stayed flat for another 12 days, you're looking at something like $12.3 billion gain. Huge deal. Well, this would be pretty monumental.
And the bears and the fudders are going to shit themselves when it happens. That's going to be great.
And then they got people in here. So Lawrence, interesting question. Shouldn't the PE ratio be like a bank? Well, like what is JP Morgan's PE ratio? Let's look it up. Somebody look that up. Goldman Sachs. What's Goldman Sachs PE ratio? And
while you're doing that, people were asking in the chat, do I hold covered calls over earnings? And just out of pure superstition and like paranoia, I generally take as many of them off as I can. Like, I'm not saying it's going to run up, but I'm still too scared to keep them on.
All right, so JP Morgan's got a PE ratio of 13. Goldman Sachs got a PE ratio of 14.4. Right now, Strategy's PE ratio is like 8 or 7, something like that. And again, you think about, why is it that? Like, why are earnings priced at a premium? Like, why is Apple trade at a high PE ratio? Why do any of these growth stocks trade at a PE ratio? Because the idea is that all equities are forward-looking. All equities are a function of what the value of it's going to be in the future. And like, why would Strategy trade like a fiat bank when it's a Bitcoin bank? You've got fiat. It's like you're comparing things that just aren't the same, right? Like, you've got fiat instruments. You're providing all these things for in fiat land with a zero. Like everything that they hold is depreciating, right? You can't retain those earnings because that everything is depreciating. Now, if you're a Bitcoin bank, you should be valued higher because everything is appreciating relative to the dollar that's like measured in. So it's an interesting question, interesting point. I don't think it's incredibly valid, but it's worth bringing up. And you look at the multiples, like price to book value or multiple net asset value of any of these other companies. Why do they all trade so high? like what's Palantir at, I don't know, 500x multiple of their net assets? Why do they trade like that?
Yeah.
Should their PE decrease over, maybe it might take decades, but as Bitcoin's compound annual growth rate diminishes, like maybe it should contract, at along,
Well,
directly correlated with Bitcoin's CAGR.
Well,
wouldn't it depend on how well they're leveraging it, though?
What?
Say that again, Adrian.
Wouldn't it depend on how well they're leveraging their Bitcoin holdings by that
True.
point, though? If we're looking over the course of several decades, how many offerings do they have at that point? How many different ways are they existing in the market? How systemically important and systemically relevant are they in the market? So Bitcoin's CAGR could decrease, but their holdings could be so large and Bitcoin's price could be so high that they still demand that multiple, because they can still give out these div payments. They can still do all these things with different offerings. Everyone's still getting their strats, like we talked about last week, right? Everyone's still getting their strat payment. So,
And if they've demonstrated 50 years of managing that leverage effectively, then maybe they would be able to command that PE, for even longer.
I don't see why not. I mean, so Bitcoin's at 100K right now. Let's fast forward 25 years. Bitcoin's at 500K. They have over 1 million Bitcoin. They have a $5 trillion market cap, right?
Yeah, that would be 1 million times 500,000 would be 5 trillion.
Yeah, $5 trillion market cap, and they have a $5 trillion market cap that has all of these different preferred offerings on top of it. They probably have different variations of them by that point. They're paying out these dividends. I mean,
it's the safest equity to hold on the planet,
right? Because when Bitcoin's 500,000, people always talk about, well, what is it going to retrace down 80%? Well, what people don't realize is at a $500,000 Bitcoin, it's going to take a lot of capital to leave the market to substantially push it down, right? And at that point, when the market cap and price per Bitcoin is that high, what is really going to motivate that 80% drawdown? At that point, are people still chasing the pump? Are people still chasing gains? I don't think so. I think Bitcoin becomes a more stable asset. The higher in price it goes, the less sharp those drawdowns are going to become. So by default, strategy becomes more stable as a result, right? And if strategy is more stable as a result, and they can issue these offerings on top of Bitcoin, and they can have these offerings, like Jeff's been saying, these are not offerings that are backed by fiat. These are offerings that are backed by a hard asset. That all of these different offerings at that point, in my mind, would have to demand a multiple on the common. It just stands to reason.
And there's a comment here, and I brought this up earlier, and I think this might be the same person I was chatting with on X. At that point, would it not make sense to sell some MSTR and buy the same dollar amount of BTC? I think you can see this multiple different ways, right? How much Bitcoin do you already have? How good is your life? Are you able to do stuff with Bitcoin that you're unable to do with MSTR? Is there a benefit of holding MSTR over Bitcoin? And my response to that is, if I held Bitcoin, which I do, I can't issue 5% debt fixed income instruments on my own Bitcoin, but MSTR can.
Yes.
That's why I hold it. I hold it because I'm getting a tax deferred dividend reinvestment program via MSTR paid in Bitcoin. That's why I hold it. And I can't do that. Like they because they're so fucking big, they're able to do things corporately in the capital markets that I can't do because I don't have that scale of capital. I can't go issue 0% convertible debt. I can't take on that kind of leverage. But I would rather hold those types of equity instruments and use them to my benefit. And even if you think about and I love this thought process. Even if you think about a fully Bitcoin denominated ecosystem in the future, right? So there's going to be more than 21 million of Bitcoin worth of value in the world, right? Because not everything's going to be for sale at the same time, right? You're going to have, so there's going to be 21 million Bitcoin, right? We know that there's going to be 21 million Bitcoin, but there's also going to be value stored in houses, tons of value stored in houses because people still need to live. People like desirable places to live. Even if you price those as Bitcoin, that means that there's going to be 100 million of Bitcoin worth of value in the world, but it's just not all for sale at the same time.
Mm-hmm.
Right. And like, what's going to be the value of holding equities at a point in time in the future? Am I going to hold an equity in a hardware wallet that's fully divisible that I could divide up sats and I can pay? Let's say Solei goes out and we go get beers and I pay Solei and MSTR shares, strats, right? Micro strats.
Mm-hmm.
Like if you don't think the future is going that way, you're crazy. Right? Like the future's getting faster, like way faster. And we're going to see the use case of holding these things is going to change and evolve over time with the digital economy. And that's where we're going. There's no ifs, ands, or buts about it. Like that's where it's going.
In my mind, a future like that, and again, this is me talking more of a Bitcoiner perhaps, or just trying to bring a different perspective. In a future like that, it makes sense to hold Bitcoin and MSTR, and maybe even playing devil's advocate, some of these other treasury companies that they're still around, because if we scale it up to the future, Bitcoin's $500,000, $1 million, or whatever, and the companies with Bitcoin on their balance sheet, in my mind, just like we're seeing now, are going to demand an additional premium because of that future that we're envisioning, right? Then on top of that, if we think about the buy, borrow, die model, if someone holds a bunch of Bitcoin-backed equities, whether we want to call them LBEs, BACs, whatever, they are an equity that is backed by Bitcoin on some level, a company that holds Bitcoin on their balance sheet that is bolstering the strength of their company. If we take a buy, borrow, die model, are those equities going to get the same kind of interest rates in the future? Would they get better interest rates for borrowing? Like what kind of different ways, you see what I'm saying? Like what kind of different ways is the market going to stratify itself? Like Bitcoin borrowing, Bitcoin equity borrowing, you're going to get a different kind of interest rate on that, right? Then you have regular equities that you can open up margin on, you can borrow against, what have you, are going to have one set of interest rates. Then perhaps IBIT, FBTC, the ETFs, are they going to get differentiated interest rates in the future? Because Bitcoin is now a stable asset, but is now seen truly as digital gold, right? Because if you go into a bank right now with tons of gold, they're going to smile and they're going to let you borrow against that all day, right? So if Bitcoin truly gets to that parity in terms of perception and market use of digital gold, and you have equities in your portfolio, strategy, similar, whatever, and you can borrow against that, you may never have to sell them. You can borrow against your Bitcoin, you can borrow against your strategy, and you can just buy, borrow, die, and keep rolling that if the CAGR holds up, and if the returns holds up. And if the CAGR doesn't hold up and it's a steady state asset, they're just going to let you roll it anyway. So you can probably be able to borrow money in perpetuity and just pay off the interest and pay off what you want to pay off, and just essentially do the buy, borrow, die model that Jeff Bezos, Tim Cook, Mark Zuckerberg, all of the wealthy right now, they're not selling their assets. They borrow against them in perpetuity.
Yeah. That's because they're collateral.
Exactly.
They're collateral. The power
and that's
of
what
collateral.
Jeff's been saying. That's what Jeff's been saying. Strategy has a massive moat of pristine, future-proof collateral.
Yeah.
That they can borrow against in perpetuity. That they can back up assets, they can back up offerings against in perpetuity. That will demand a premium. So for everyone saying, well, mNAV should be 1, I'm just like, I don't know if you're really thinking it through.
Yeah, and I mean, one thing that I think that Chanos may not get is you can't unorange pill somebody. You know, once you take the orange pill, you're like, dude, my whole world shifted. I can't
plug back in.
I can't take a blue pill either. I can't take an XRP pill either. You know, like it's just not going to happen. And it's like, I don't think he really understands like how strong of a holder and how like psychotic of a holder base this is, right? These people are going to hold this shit forever, and they are the lowest time preference people. And these are the people that are also holding strategy, which just makes it even cooler. Well, actually, with the exception of the traders, the people that are following the blind squirrel chasing the nut. But
like this is what we talked about last week. The weird thought process is sat and strat. If Bitcoin really does scale, which it will, does strategy get to such a level in the market where they're seen as a completely different entity whatsoever from everything that exists, given the size of their moat, given the size of their holdings, given the size of the amount of collateral that they have, the offerings, and so on and so forth? Can they get to a scale where you have like the Mag 7, then you have strategy and the economy that they've built up around them, and people, like what Jeff's been saying and what we discussed last week, people are living off of the dividends, right? Like, just imagine if someone has, I don't know, thousands of shares of Strife right now, and they're able to keep adding to their positions, and we hit escape velocity, and they're living off their dividend.
Yeah.
Like, do you see what I'm saying? Like, there's just so many different ways this thing can go. So I think that people need to kind of like price that into their skeptical models when they're really trying to assess it. And Chanos doesn't get all of this. He just doesn't. But the market will figure it out over time.
Yeah. And I want to bring this up too, because I think this is a really good point. I love the zero carry cost to store 12 words in your head. And I think this is really valuable to think about, like, competition in the market of the Mag 7. Like, why is the Mag 7 really valuable? Well, Apple is selling a ton of iPhones. They're collecting a lot of data, but in order to retain that wealth, they either have to like buy back their stock, so that they do that, but they also have retained earnings that they keep, and that retained earnings is dwindling. And in order to continue to build that retained earnings, you have to have more employees, you have to pay the employees, you have to have like infrastructure for all of the employees, you have to have sweatshops in China that are building your iPhones, or like future robots that are building the iPhones. You got to buy the chips, you need all the energy to create all this stuff, and the cost of continued production of all of these things, it just keeps going, right? It keeps going, and it's going to inflate over time. And so you think about like the probability of loss or deterioration from having to keep sustaining and growing that pace is really tricky. Like, you get to a point where you're so big, you can't sustain a certain growth rate. Now you look at a company like Strategy that's holding all this capital, and they're retaining all this capital, and they're retaining it and holding on to it cheaply. It's not like holding real estate where you have vacancies and you got like a ton of maintenance, and the roof falls down, you got to replace the roof, and all this other stuff. And like with Strategy, you just hold it. Like, you just hold it digitally. You don't even they've got to pay like their custody fees and things, but I'm sure it's a hell of a lot less than holding $60 billion worth of gold. If you held $60 billion worth of gold, you got to think about, like, where do I store it? How do I do all this stuff? Like, there's no other asset like it on the planet where you can just have so little carry cost with the appreciation potential. People also haven't understood that one. That part is just totally underappreciated. All right, we're at an hour 48. Tim, it's like, I'm sure the sun's coming up. I can't believe you're here. Give us a rundown of Bitcoin Prague, at least so far. Like, I'm sure you just landed, but like, what are you excited about? You got some things on the horizon. There's a lot of people there, some good energy.
Yeah, I mean, we'll see.
Tim, not to cut you off, but guys, I got to drop.
All right, later, Adrian.
Thanks, Adrian.
Right.
Good night.
Later.
Yep, the sun's coming up, right? So it might be midnight in New York, but it's 5:49 a.m. in Prague. Yeah, got in early Wednesday morning Prague time. Met up with some guys, right? Walked around, I posted a picture of like the Prague old car. You can basically like take a car and they zoom you around. I didn't know that Prague is home to the largest castle in the world. Now, I still need to like go to chat and be like, is there a certain definition of the word castle? Because that seemed a little odd, right? Like, what?
Yeah.
Prague is home to the world's largest castle. But yeah.
Castle complex. Whoa, yeah, okay, interesting.
Okay. So yeah, Thursday today, there's the conference kicks off. Friday. So it's like, I guess Thursday and Friday is almost like an industry day, maybe like 2,000 people. Saturday's the main day, maybe 10,000 people. And, add them back, Sailor, everybody's here. More so for the Friday, Saturday sessions, from what I'm looking at on the schedule. So yeah, no, I was hanging out in the hotel lobby last night, right? I'm just looking out the window. I just see Sam Callahan just walking down the sidewalk. I'm in the square looking at the whatever the clock is called, and right there's just like a sea of people, and just I see like BTC sessions just like walking through the crowd. So
Cool.
it's like conference vibes, and
But you're in
everybody.
a cool European city. Yeah.
Yeah. When I was at the Bitcoin Investor Day in Paris, Matthias, one of the two brothers that runs this conference, he was like, talking to me, and he's like, you got to come to Prague. And like everything that everyone has hyped it up to be is true. Like it's very cool. It's very old. It's almost like Parisian with like a little dash of Rome, but just like, it's very affordable. So yeah, very cool.
Damn, I'm feeling some serious FOMO now, Tim.
Sorry.
Yeah, me too.
I'm about to check flights.
Yeah, geez, get out there.
I'll be there later. Pick me up at the airport.
Well, thanks for joining, Tim. Thanks for hopping on. Appreciate the perspective. Go get your boots on the ground, figure out what's going on down there. And I know it's Bitcoin only, which is great. No shitcoinery. And get the latest scoop, and we'll bring you on next week, and we'll chat through what's going on.
Sounds great.
Perfect.
Fun as always.
Solei, last final thoughts.
I knew when you said this might be a short one, I knew you were full of it. But I think that
hour 50.
this goes with the sentiment again, and I'm sorry that Adrian finished or had to drop already, but I think that earnings for strategy is the most important thing, but also the least important at the same time. So it's almost like quantum earnings. And I think it's the least important because we already know what the Bitcoin price is. So we already know what strategy's worth. But at the same time, and this I think affects the sentiment, since strategy doesn't need to go to earnings to tell you where strategy was over the last 3 months, because we all know what the Bitcoin price was, and we know how much Bitcoin they purchased. I think investors of strategy are going to be looking to the earnings calls for that reassurance about where they're going to in the future. And so, if we see some people running off and pulling out some of their strategy money for Metaplanets or any of these other things that are going to be popping up, I think it's going to be the plan that they lay out at these earnings calls that's really going to reassure the investors and keep them excited.
Right, absolutely. And every single earnings call that strategy has put out has been just a total banger since Q3 of 24. Every single one, it's just been like, whoa, oh my God, more stuff.
Yeah, it was like 21-21. Oh, yeah, let's do 42-42. So you just want to know that the company is going where we want it to go.
Yeah, 100%, 100%. Yeah, I mean, Chris hit it. Nothing's really changed. I mean, the thesis hasn't really changed. It's just like we keep going here, and there's some chop, and there's some people complaining about short-term volatility. But I do think, again, this is the biggest story in all of finance. Not just the Bitcoin treasury companies, but really MSTR and how big MSTR is relative to these other companies in the market. And people just don't really conceptualize it yet. They don't understand how powerful this stuff is. So again, that's why we're talking about this. We're educating the market. Our goal is to educate the market, talk about what's going on with finance background, understanding capital markets, and plowing through, what's happening day to day. So I do not think we will have an episode next week. Maybe we will. I don't think I'll be on it. My life is super hectic the next couple of weeks, and I'll be back on here shortly. But yeah, thanks everybody for the time. Appreciate it, and we'll keep on cruising.
Yeah, let us know. Let us know, Jeff. Solei and I can, maybe tag team hosting one of these, and kind of stumble through it. Right?
Yeah, get through.
There you go. Right, we'll moon math it.
Yeah, absolutely. Just the moon math is good. You got to have the moon math. It's helpful. All right, 9,200 people. Thank you for joining. Appreciate the time. An hour and 54, and we are finished with episode 30 of the Investment Grade Bitcoin Podcast. Cheers. we're going higher. Yeah.